Joining me on Startup Report today is Bryan Young, who is the CEO of Home Lending Pal. Welcome.
Welcome. Thank you. Pleasure to be here.
So I guess, we're going to go straight confessional. Do you have an accelerator problem? Are you, how many you have going on right now?
We do. We have 3 that are going on right now. One ends and we start another one next month. So we do have an accelerator problem at the moment.
Well, that's not a bad problem to have because it's all knowledge, it's all networking, it's all opportunity. So that's and getting into them is an honor and a win. So congrats on it's a good start that you're in 3. I would say.
Thank you.
So let's dig into the product a little bit. Tell us about your AI powered mortgage software.
Yeah, the home. If you look at the home buying process, it's very complex, and it's one of the few things, and if anything, especially online, that you can't compare and really get a true understanding of what you're getting yourself into before you go through the process. And for us, we figured out, why. A lot of the stuff, the information that they use is digitized, but the industry itself has just kind of shunned away from that concept. And, while we love our partners, the lenders that we work with, the banks that we're working with, or, going through the process of working with, it's still one of those things where if you're looking to buy a home, you still have to go to someone who's, incentivized to sell you a product at the end of the day. So what we've done over the last 2.5 years is, try to find a way to make the process more transparent and unbiased for the consumer, where you can get, deep level answers without necessarily having to talk to a human or even, expose more of yourself when you're ready when it comes to the home buying process, or utilizing artificial intelligence, data-driven workflows, and blockchain to do that.
So at the end of the day, you find that most people have somewhat similar needs, and the profiles are somewhat similar. There's some basic algorithms you can put behind it, and then continuing to improve those. But really, the biggest problem you're solving is just access to that information without it being attached to someone who is incentivized to push you in one direction.
Yeah, it's that portion of it. A lot of the information is standardized. I think where you see discrepancies at is really the underwriting risk or the mortgage overlays that different lenders or banks have, which is basically their level of risk and risk tolerance they're willing to accept. So, one bank may be willing to accept borrowers to have a 620 FICO score. Others may be willing to accept 580. You don't really know, but the standard baseline guidelines of everything are kind of standardized. It changes from lender to lender. And that becomes confusing for the consumer because, it's like, well, I was told this one thing from this one bank and, another bank told me a different thing. So what we're looking to do is basically to give you that answer to basically utilize digital means by, trusted digital sources. So places like Equifax, Plaid, which you connect to, pulling that information and then simulate the process, but then also find, what is your best home loan product? What is the best lender based on your current lifestyle, your spending habits, your credit profile. And then from that, give you a better understanding of here's what you need to do to be able to secure the home that you're actually interested in is really the overall goal of what we're trying to accomplish.
So theoretically, when banks set their guidelines on their parameters for the types of loans they want to fulfill, do you find then, how are you getting access to that data? Because it's some of that is sort of inside baseball for the bank. Are they forthcoming with it? And then what about when it changes? The banks change their parameters, not infrequently. So how do you keep abreast of which banks are looking for what types of profiles?
Yes, I mean, surprisingly, we're moving into a digital age in which the millennial, which is currently right now 39% of the buyer's market, kind of controls the pace of how things going. And what you're seeing with this digital age is that there's an expectation that I can see more of my own data, but then also who has access to my data. So naturally, kind of like you mentioned, what happens behind the scenes in that little black box is, quickly being exposed by digital means. So what we're doing is we're partnering with organizations like Zillow, primarily. There's a couple others that we're using as well. But, we're IBM is one as well, where we're bringing them onto our blockchain network. And then, with the banks themselves, they usually update their stuff probably about once a quarter. So we do have API calls that we make in which we automate that process for them. And then what actually happens, the true value of our system is what we call a health token, which is basically a secured means of storing your personal information, your financial profile, your credit information, everything that you would need to submit a mortgage application. And within this token, as you interact more with the system, you're filling out more information, when you're ready to send that to different lenders, you basically self-select which lender gets it and what information they see from that token. But more importantly, you're then able, as you mentioned, because banks have so many things that happen behind the scenes, you're then able to actually see what they're actually doing with your documents and who they're giving your documents to, instead of just going off and then coming back saying you're approved or you're declined, which is really where the world is going when you look at things like GDPR and stuff like that.
Right. So then, I guess my next question was going to be: is this sort of a push or a pull environment? In that, you look at like a lending tree where they're pushing out the opportunities and looking for a response. You're saying that with your APIs, you're able to get enough of an idea of what banks are into what, that you're able to then choose from that data who you want to push your information to, and have a specific reason for doing that, ideally.
Correct. So we're fortunate. I mean, even though we're a startup, we're still partnered with a lot of the vendors that, like the lending tree, for example, that they have. The biggest difference is that the consumer, as you mentioned, this is more of a pull scenario where the consumer is more controlling the process. They're deciding who they want to talk to instead of, you're submitting information and immediately being bombarded with sales calls, being overwhelmed. For us, it's more about education and knowledge more so than selling you a lead. I mean, we've done private beta testing. And the good news was that, we had one lady who was like, I just met with a mortgage broker last week and your predictions were spot on to what that person gave me, which is excellent. That's what we want. But she did not utilize our system to be connected to any lender. She just wanted to verify the information that she was being told was right. So, I know that sounds kind of counterintuitive business to say that we don't care if you actually utilize our system to connect to a lender because that's how we make our money. But at the same time, we think that, that trust, that putting the borrower's need first is really what's going to help us grow and scale in a very competitive space.
Sure. And a lot of even if you grow as a backup, it's not the most ideal financially, but eventually it'll flip over and you acquire a user base and brand recognition. And you assume people will come over the front end and use you for the
Exactly,
lenders.
exactly. For us, it's more about the trust and letting borrowers know they have someone that's on their side. I think to date, you really don't have any tools out there that are truly on the side of the borrower. And there's not to say that no one's ever tried this. I mean, you have companies like Better and Rocket that do it, but at the same time, they're internal tools that are only used just for originators. Whereas, our tool is more so a independent play where we're not tied to any lender. We just want to find the best thing for you.
So from a technology standpoint, when you get to the health token, how are you hoping to be able to pass that over to lenders? Do they even have rudimentary APIs where you can submit the data, or does it ultimately become they take the data and sort of manually paste it into their system on their side?
So we're fortunate that the mortgage space, for as antiquated as it is, a lot of the systems are similar across the board for a lot of different organizations. So the data itself is really just passed into a CRM, the same type of API that you would expect with any CRM. Most lenders use Encompass, so we are creating APIs that integrate with that they can pull the data from. Um, Basically, what happens is the user authorizes a private key in which that gets passed over to the lender. Then the lender has a private key in which they open the file, and you're able to see kind of what happens. And it's immutable, so every time it's open, you can see what happens. As far as the network itself, we're fortunate that organizations like IBM are stepping in as of this week. IBM and Equifax are really stepping in and allocating resources and production teams to us to build a custom solution. So that we avoid a lot of the common pitfalls that other organizations have seen over the last 5 to 7 years that they've been doing this. So that really helps us kind of avoid a lot of those pitfalls and also onboard lenders as well, which is really our imperative thing. So we're kind of skipping to a line in that sense, but the most important part is that that private key, that exchange from borrower to lender happens relatively smoothly, and as you mentioned, then we integrate into their systems relatively easy, so to speak, through an API.
That's great. Let's talk a little bit about the genesis of the company. So how did you come up to do this?
Yeah. So, I've been doing consulting and work for about 17 years, and my business partner, Stephen Better, has been a mortgage originator and also an underwriter himself for about over 10 years. And you look at the subprime mortgage crisis, we were both kind of involved in that in different capacities. But, the banks profit over $640 billion. More than 4 million people lost their homes. Most of the executives got, 8-figure severance packages and a slap on the hand. There's, I hate to say it, no one that's in jail for the greed that happened there. And, general consumers like yourself and I, were the ones that were kind of left to foot the bill of bailing them out. So the idea was like, how do we help borrowers, consumers understand more about, just beyond a decision of are you approved or you declined, what is your pre-approval odds, et cetera. What is your true affordability? And it goes kind of against the grain of saying, I'm going to put you into a home or into a mortgage. We're saying, yes, you may qualify for a $750,000 home, but you should truly only be spending, 500,000, for example. And the reason that we're doing that is because I bought my mom her dream home and lost it during that time because I didn't understand, what I was getting myself into and how the monthly mortgage would flip after year two, based on the loan I was actually in.
So now you're actually adding in a philosophy to the service, and obviously people want the biggest and best home they can afford. That's what drove the greed in the first time to go for bigger and better and get over get over what they should where they should have been. So when you put yourself out there to to the community, are you leading with that, saying we're going to actually, part of our real value is making sure that you make good financial decisions? And is that what you're leading with from a messaging standpoint, or is that more baked into the back end?
Somewhat. I mean, you can lead a horse to water, but you can't make it drink, relatively speaking. Our biggest catch right now, as far as hooking into bringing people into our system, has been more so exposing the hidden costs for homes that you're actually interested in. So one of the parts of our system is that, you look at the general home ownership journey. It usually starts with the home. I say, I like that home. I want that home. And you fall in love with that home. But then you go through this entire process of submitting your financial information, your credit information, multiple documents. And then at the end of it, you find out whether you qualify for that home or not. What we're basically saying is that if you fall in love with that home, that's fine. Add that home to our system, and we'll be able to instantly tell you if you would actually be approved for your odds of approval for that home, and 5 to 10 lenders that would be willing to work with you to originate a home for that home.
So that's slightly different than you're not looking to come back at them and say mortgage broker A, B, and C would approve you for this, but you probably shouldn't do that.
No. So our system doesn't. It just shows you that mortgage broker A would approve you, but here are going to be the costs associated with working with mortgage broker A, and it helps. I mean, of course, and we've had right now 4 of the top 15 lenders by volume in the country are already looking to do paid pilots with us. And for them, this is something that people are going to try to search for anyway. It's where the world is going anyway. You've seen it kind of accelerated with COVID, where people are realizing that I want to be able to do this with less human interaction, but from the comforts of my own home. But I want this information, so we're basically just pulling in that information and showing you, and then as the consumer, you get to make that decision. But we don't really guide you one way or the other as to which lender you do or do not work with.
That was one of the tough things about the original crash, is that if you just put the data in that was available to you, it did say that this house should be available because the loans were being made, right, based on the ratings. So it's tough sledding to try to get behind the curtain and look at how would you have known that the AAAs weren't, I guess slightly different, but there's a lot of stuff behind the scenes that wouldn't have been available to sort of front end processing, which makes keeping people out of that mess a little more difficult.
Exactly.
So the real estate industry, especially in the real estate tech, is viciously competitive. What's your customer acquisition strategy?
Yeah, so because we have such a social cause, we actually built our wait list up to about 15,000 people pre-COVID, pre-launch. And we primarily focused on partnering with organizations that are geared towards helping people understand home ownership. So organizations like the National Association of Real Estate Brokers, HUD, Financial Clinic, we found financial influencers. But one of the cool parts about our system is that we actually have a conversational chat bot that you can actually utilize through Facebook, in which you can come in and ask questions. And as we train it, as we grow the knowledge base within it, it will give you personalized answers or kind of push you to our system, which will also do the same thing. But that's really been a cool feature that people have loved the execution of, but have loved interacting with, and it kind of explains more about what we're doing, why it's important, and answering just general broad questions and giving you more narrow, personalized questions as you interact more. So we think that that's going to be our key kind of hook, if you will, to bring more people in. And that's really hard to replicate for others. And then The ability for us to be independent and make recommendations for anyone is really different. A lot of our competitors, are customer centric in the sense that they built their solutions, they built their platforms and servicing the lenders and the banks, where we are consumer centric in that we built our platform to serve the borrower, to serve you as the general consumer. And because of that, we feel like we're going to get you higher in the process. So, with our system, whether you're looking to buy tomorrow or you don't know if you want to buy a home within the next 3 years, but you just want to start planning now, you can still utilize our service. And again, we're not going to try to sell you anything. We don't really, I hate to say it, we don't care. We just want to make sure that you understand through the entire process what you're getting yourself into. And our system, as it learns you better, will start making more recommendations as to, realtors you should use, appraisers you should use, loan products, programs, etc. So.
And this is one of those, again, in real estate business, it seems like there, it's great ideas and great concepts and even great technologies. Getting adoption is tougher in real estate than almost any other arena. As you came forth and had this idea, and it sounds like there's a little bit of mission driven element to it as well. Have you found getting the word out when you look at cost of acquiring a customer versus the lifetime value of a customer? Do you feel like it's been in line with what you sort of assumed, or do you feel like it's going to be a little tougher sledding or easier sledding than you assumed to get enough people as revenue producers on your platform versus the effort it takes to get them?
I think a little bit of both. I think the true value in what we're doing is the data itself. Once the consumer opts to share that data, I think that is extremely valuable, and we can put, a price on that. I don't know if we can put a price on that makes sense, but so far it's been really good in the sense that, the price that we're giving, actually, we've had a lot of our partners say that they feel like that's too low for the amount of work that we're doing up front. But I think it's still going to be a continued process where we're going to have to continue to iterate. It's going to continue to change as we grow. And we're going to have to be open to different things. And I think the true beauty of what we're doing is that, while we're starting with the home purchase, because we have all this information and because of what we're doing, we should then theoretically be able to expand into, does it make sense for you to take a personal loan, a credit card, a car loan? And we've already built that trust. So that part is more important. The trust factor is more important to me than necessarily how much it's going to take to acquire the initial customer, because I think the overall customer lifetime value would be a lot more exponential because of that. And that's really what's going to help us scale quickly. And we haven't really had, as far as, lenders having pushback or anything like that, like lenders and realtors actually surprisingly have loved the concept because we're saving them time and energy and money doing stuff that they would typically, as a lender, you still have to run the soft credit pool, which is, a huge cost center for yourself. You have to, track down all these data documents that we're kind of bringing to the forefront immediately. If you're buying leads from another lead generation source, it's basically based on, how quickly can you get to them, and the close percentage is like less than 3% in the industry. So there's a lot of behind the scenes problems that we're fixing for the lenders and the realtors that they enjoy as well, even though our primary focus is the borrower. So we've kind of put the borrowers first, our partners or the lenders second, and ourselves third in terms of, what makes the most sense for us when it comes to developing our solution.
Cool. So what's the revenue model? Can you talk a little bit about are you able to tap into a percentage of the loan, or is it a straight lead, or do you get money from the consumer?
So right now, with where we're at right now, it's going to be it usually costs us anywhere from about $17 to acquire a user into our system. That has been kind of going down because of the amount of organic traffic we're getting right now. We did our pilot last month, and we had 300 people that opted in that we didn't know that opted in to test the pilot without us even really sending out any requests or asking for it. So with that, we expect that the minimum cost of a lead is going to be sold for about $55 to $250 plus for a lead. But as you look at how we transition from year one to year 2, 3, and beyond, year one is more so we're making money from lead generation, targeted ad revenue, quick referral traffic, and appointment setting. I would say at the end of year one, more so closer to year 2 is when we really start to kick in the blockchain system that we're having, making money from a percentage of the transaction of the deal for the loan size based on basis points. And we will be doing that through smart contracts. So I was talking about, IBM and Equifax and stepping in and kind of leading that process. That's kind of where we're going. And we do expect some of that to take some time as far as getting everyone on board and getting everything set up. So Users will still be able to utilize the platform, but we're not actually going to try to monetize that until close to the end of year one, early year two, more than likely. I mean, now if it happens quicker than that, we're all for it, but our current timeline has that a little bit later.
And do you anticipate offering tiers within the platform as far as AI at the base tier and a human guide or whatever at a top higher tier, or are you going to make it basically all try to be all automated and drive off the transactions and leads?
Um, Yeah, it'll probably be tiered. So, I mean, we're always going to start with our AI, the automated aspect of it. There are still some people. So, what we found in our research are that, especially with millennials, and I keep using millennials because that's our primary demographic when it comes to adoption of what we're doing, giving your financial information online, authorizing a soft credit pool, and talking about the home or adding a home. That is usually right now, that's the demographic that's most willing to do that quickly. Um, so the first tier will be an automated system where they'll be able to go through the automated process. And what we found is that as a borrower gets closer to actually being ready to make that purchase or go through the actual submission process, they're willing to submit the documents. But at that stage, that's when they become ready to talk to a lender. So that's when we'll start making the introduction. Like here you can talk to a lender, but then you'll manage the process through our blockchain system, in which you're sending smart contracts or documents that have to be signed, et cetera, through our system. But the actual interaction will happen through phone calls, et cetera. And we're looking at licensing that to different banks. And that's kind of some of the conversation that we're having right now as to what that looks like for us.
Very cool. If someone asked you from the outside, what's startup life like? What are you giving back right now?
Uh, Startup life is hard, man. It's not easy. You're not your own boss, as many people think. We were a completely remote dispersed team before all of COVID happens. It's actually kind of made it where I work more now because I'm not traveling as much. I'm not. Well, I'm in a lot of meetings, but I have day full of meetings like today. I started at 8 a.m. I'm in meetings until 5 p.m. And then after 5 p.m. is actually when I have to start doing the marketing and stuff. I specialize in the marketing and business side of our company, and as a CEO, I'm leading our fundraising efforts. So my day really doesn't get started until 5 p.m. Um, so it's tough there, and we have 12, 13 employees now. So I have 13 different lives that I have to worry about. 13 different mortgages or rent payments I have to ensure get made, and so it's just a little bit stressful. It's rewarding, but it's also stressful. And I think it takes a special kind of person to want to do this day in and day out. But if you find something, I guess you're passionate about, is probably the easiest way to do it. Just because it makes it a little bit easier to at least want to wake up. But I am energized to get up most mornings. Most mornings, not every morning. I won't try to act like I am, but most mornings I'm energized to get up and do what I'm doing. So
Wonderful. I've enjoyed the conversation. It's your like I said, the real estate industry is you have to have a sturdy spine and a brave spirit to get into it. But if you hit and it works, then it changes lives and it can be really profitable. So it can, I wish you the best of luck on that journey. And I know you moved from Miami to Orlando, and you almost completed the full upgrade. You just need one more jump left into the Tampa St. Pete area, and then you'll be exactly where you need to be.
absolutely, absolutely. It's been a pleasure.
All right. Take care and try to get some rest.
Have a good one.
Bryan, see you.